when everything does go south, if you own silver and gold, and I mean, you're not even have to have uh, huge quantities, but you'll more or less be considered a bank because there won't be any money on the streets. Money's going to get gobbled up, destroyed, whatever you want to call it, with a debt deflation. Debt is going to wipe out equity across the board.
Holter begins with an uncompromising truth. The global debt bubble must and will burst. The current system is built on unsustainable levels of debt, and he believes a full-scale implosion is not only unavoidable but necessary. According to Holter, you need the debt bubble to completely pop. There needs to be bankruptcies everywhere you look, blood in the streets. In other words, a painful reset is coming, and it won't be gentle. Holter sees a future where the value of most assets, real estate, stocks, even cash, will collapse when measured against hard money like gold and silver. The fiat system, based on ever-expanding credit, is already showing cracks. Once the collapse unfolds, those holding physical gold and silver will be in a position of strength, able to purchase distressed assets at fire sale prices. In his words, you don't even have to have huge quantities, you'll more or less be considered a bank.
You need the debt bubble to completely pop. It needs to burst. There needs to be bankruptcies everywhere you look, blood in the streets, and assets across the board are going to drop in value versus gold and silver. In other words, it'll take less gold ounces or less silver ounces to do the trade. So yeah, I could see it happening 2, 3, 5 years out, where everything is collapsed. You've got silver, the masses don't have silver or gold, and yeah, you'd be able to use that to acquire assets on the extreme cheap. When everything does go south, if you own silver and gold, and I mean, you're not even have to have huge quantities, but you'll more or less be considered a bank because there won't be any money on the streets. Money's going to get gobbled up, destroyed, whatever you want to call it, with a debt deflation. Debt is going to wipe out equity across the board. It could be any that you mentioned. I mean, probably the most obvious one is the political aspect of it. Yeah, you're right. I don't think he wants to give Trump the rate cuts. The problem is the math. The math is the problem. I mean, you just look at, we're spending well over $1 trillion a year now just in interest alone. And I saw a debt clock from 1990 where the total debt outstanding was $3 trillion. So in 35 years, we've gone from 3 trillion to 37 trillion, and now the interest is over $1 trillion. It's going to be probably $1.5 trillion this year, and maybe higher the following year. I mean, it's very possible that market rates, and we've already seen this, the Fed has cut rates 1 full percentage point last year, and interest rates on market prices of bonds rose 1 percentage point. So, I mean, that illustrates right there. It looks like the Fed is losing control of the yield curve, and that's a huge problem. I mean, at this point, they're damned if they do, damned if they don't. I mean, if they cut rates, then you're going to see the dollar tank, and you very well may see higher interest rates. You may see Treasury bonds sell off more and rates go higher. And if they don't cut rates, I mean, the markets are becoming more and more illiquid. If they don't cut rates, you may see a deflationary black smoking hole in balance sheets across the world with the central banks that hold dollars. So it's, like I said, they're damned if they do and they're damned if they don't. And at this point, because the math is so vast, I don't think it matters what the Fed does. It's going to be a disaster. Disaster is going to occur either way. Yeah, I think she's a possibility. I also think Scott Bessent, the current Treasury Secretary, is
Hmm.
another possibility. But yeah, I'd like to see Judy Shelton in there. I, I'm really not sure why she would want to take the job because what where she's going is not fixable. Yeah, I've listened to him uh, speak over the years, and yeah, he understands gold. He understands hard money. He understands there's a huge problem. But like I said,
Hmm.
I don't believe that it is fixable. And
Hmm.
like when you said, six-figure gold, that's not necessarily a fix for our system. Uh, Gold being brought on to central bank balance sheets. The reason they're doing that is to hedge against a collapsing dollar. Uh, Six-figure gold would ultimately, uh, or could ultimately fix the system, but the destruction of wealth, the destruction of lifestyles, the destruction of living standard, I think you would, I can't imagine how the public would react to that. I mean, I've said all along that I think that where they're bringing us is towards a disaster, and they ultimately want to bring the central bank digital currency. And the best way to do that is to tank the system and get the population to beg for it and
Hmm.
save us.
Holter criticizes the political establishment for promoting massive spending packages as economic reform. Referencing what he mockingly calls the Big Beautiful Bill, he points out that such initiatives only deepen the deficit. Far from being fiscally responsible, they are dollar bearish and gold and silver bullish. Every additional trillion added to the U.S. debt pile brings the system closer to the tipping point. And when confidence in the dollar falters, the rush to hard assets will be unstoppable. Holter also touches on the Basel III banking regulations, which were supposed to reclassify gold as a Tier 1 asset and force banks to hold more tangible reserves. However, due to American banks' inability to comply, the implementation has been postponed to 2027. This delay, he says, is another sign that the current system is too fragile to endure even minor reform. The system is broken, and those in charge know it. Rather than fixing it, they are simply kicking the can further down the road, hoping to maintain the illusion of stability.
Let me comment on the big beautiful bill. Uh,
Sure.
it's going to add what, uh, 5 trillion, 10 trillion to the deficit. I mean, it's not a fiscal reform in any way, shape, or form. And what if you look at it, that is, if you really look through it and look at the ramifications down the road, it's dollar bearish because it's adding more and more debt to the balance sheet, and it's certainly gold and silver, uh, hard money, real money bullish because anything that's going to undercut the dollar is going to be bullish for gold and silver. Gold and silver don't go up or down, they don't change.
Hmm.
What changes the value of the currencies that they're being measured in. And truth be told, um, in a correct world, everything would be valued in grams of gold or ounces of gold or whatever. That's the way things should be weighted. And your mind would be blown if you looked at charts based in or measured in terms of gold. If you looked at real estate, if you looked at uh, the Dow Jones S&P 500, if you look at literally anything in priced in gold since the year 2000, it's literally been very poor performance because gold has gone higher, which means gold gold hasn't changed. What's happened is the dollar has gone lower and lower and lower. And if you look at any countries that have blown their currency up, where their currency got completely thrown out the window and had little to no value left. Their stock markets, within a month or 2 months after collapsing, they start going straight up. And what happens generally is the stock markets end up with about half the purchasing power of what they had, but they're at all-time highs in those currencies. Now, if you looked at those stock markets, and like I mentioned with the charts, if you look at stock markets in gold terms, they go down. But the point I'm trying to make is the destruction of the currency masks the destruction of purchasing power on stocks, real estate, certainly bonds. I think, and I didn't see that, so I can't really comment too much on it, but the way you described it, I think Mike Maloney is missing the point.
Okay.
When he's talking about percentages and value, when all is said and done, in my opinion, what's going to happen is people are going to count their net worth in ounces, whether it be ounces of gold or ounces of silver or the equivalent. In other words, you might have a ton of real estate, you might have a ton of dollars, a ton of this, a ton of that, and it's only 73 ounces of gold, or what, pick a number, whatever a number is. The point I'm trying to get at is people are going to count their net worth in ounces as opposed to in dollars or euros or yen or what have you. As I understand it, John, Basel III was supposed to go into effect July 1st. And because the American banks could not qualify, it's been postponed, I think, into the first half of 2027. So I think that's been postponed. Now, yes, gold is considered a tier 1 asset, but the Basel banking rules that were supposed to take effect worldwide, that's not happened. That was postponed.
Please like and subscribe.